Hey guys, it's Simon with Trade and Perform Coaching doing the White Zone scorecard for, let's see, today's the 13th of July. It's 3:57 p.m. It was really kind of a sedated day, right? We had our Fed chairwoman testifying. We have buyers in overall control. There wasn't a lot of range. It was a little summer timing. But the White Zone still provided fantastic trade location and plenty of profit opportunities, and I think that's really key. Remember, when I'm reviewing the white zones, again, every day I stress, these are key locations, areas where I expect to find responsive buyers. If we push below them and push up into them, I expect to find responsive sellers. And the way that it goes is the white are the highest odds, yellow are the second highest odds, right? And purple and green are just interesting points of location, but they are not key trade areas. It's very important to remember that. The idea is to narrow your focus so that you know what to look for in the market, particularly for newer traders, right? As you get more experience, certainly there's other trades out there, right? I'm not saying this is the only trade in the world, but what most retail traders experience is this boom-bust cycle, and I'm trying to help end that boom-bust cycle by helping them to know where to concentrate and where to focus. Possibility of loss is always there, but the win rate and the win percentage is very, very high. So before we get started and kind of going through the scorecard, let's do the quick disclaimer. Where is it? Right here. So basically what this says is past performance is not indicative of future results, right? The webinar is for educational purposes only. This is not a solicitation or a recommendation to buy any particular financial instrument. Equities, futures, options, and currency trading have large potential rewards, but also large potential risks. Be aware of the risks, be willing to accept them. Don't trade with the money you can't afford to lose. So let's jump in, guys. So first of all, ES, right? I like ES for a lot of reasons. Number one reason I like ES is it provides a ton of liquidity. The more liquidity, the less likely you are to overshoot a trading location, the more support you have. So you'll notice in the morning, right? I want everyone to see this. If you come in from a 24-hour perspective, we pushed up overnight to 24.46. As we came into the U.S. Open, we came down. We just barely missed filling the gap. But right here, if you're uber aggressive, and I pointed out, I said, hey, if you're super aggressive, right, because it's the first, let's define what super aggressive is. If you're super aggressive, you're comfortable trading in the first 30 minutes. Why is that an aggressive area? It's an aggressive area because you're getting a flood of orders come into the market all at one time, particularly in the first 5 minutes. And so you don't, quote, know for a fact that an area will hold or not, right? They could flush it with volume and have it flush that zone right out of the gate, right? So the focus is on the first time. Officially, this was the first time into the zone. You see it push down, pushes towards Globex low. This is the low overnight, pushed into the white zone. Remember, these zones are posted in the evening. Like right when I get done with this video, I'll go and post the zones, right? So we get responsive buyers. How much is this worth? If you took the top, forget pushing back to Globex low. If you just took the top, 24.4175, we're going to draw this out, and we roll out to about 24.45, right? That's about 3 points right there. 3 points is equal to about $150 per contract maximum extension. Wow, my 5 is really terrible. So we figure out that's $150, right? And this little move right here. Now you'll notice we got a second push down. They failed to be able to get it to close below Globex low, right? This set up an opportunity for more advanced traders to take the second push. And in this push, right? Let me move the chart over a little bit. There we go. And this push right here. So this is a great example of where the second push held. We failed to close below the white zone. We trapped short sellers right here, and we trapped cash shorts. Cash shorts are people who want to be in the market but are staying in cash, which is a position, right? And they're a cash short because they're foregoing the gains in the S&P because they're out. They have to chase the second move in towards Globex low. Again, when I count from the top of the zone. So if you took it from the top of the zone, 24.4175, stretched all the way up to 24.46. Again, the focus is really the first time into a location. So I want to clarify that. If I were a trader that didn't have any additional skill set or I needed help, the next area I would have been looking in would have been down here at the yellow zone. The yellow zone never got elected, right? And my target would have been the yellow zone above, right? There was no white zone above or below. This was the only white zone today. So that moves from 41.75 back up to Globex high, which was 46.50, right? And then I think at the end of the day, so 41.75, let's call it 42 to 46. That's 4.5. And then you add another tick, 4 3/4. So that second push in, the assumption is you took it from the top on the second push in, right? That second push would have been worth, again, 4 3/4. 5 points would have been worth $250 per ES contract, right? Let's see where we pushed for a maximum extension today. One sec, let's take a look. And at the very end of the day, almost tagged 24.47.50. We barely missed it. One other thing I want to point out, by the way, guys, in summertime, right, we had the Fed speaker this morning. She rarely says anything bearish, so the market didn't push down. But this is pretty typical. If you're having trouble over trading, taking losses in the afternoon, that's because that's pretty typical of summertime trading. You just really want to pull your efforts back, relax. The market will come back to being volatile in the afternoon. This is normal July, dead of summer trading. There's just not a lot to do. Next, let's go check out NQ. CL was really the all-star today, but along with the 30-year note, the bond. But let's go check out. Hold on one second. You know what? I have it right here. There we go. So here was NQ. So the key location for NQ, again, was the white zone below at 57.71 to 57.60. Never got tagged. The second best location, right, was the yellow zone. And if you'll picture this, right, we traded at Globex high. I believe Globex high last night came in at 58.10, maybe a little bit higher. So you have to picture an overnight session where we push down. I'm going to draw this, right? We push down into the white zone. And again, I stress, you have to have a reasonable stop behind. This is a great example of how you can get to a key location but have an additional press right off the open, right? Now, NQ is thinner. That means the float has fewer number of contracts that are trading on it. It's easier to push that product around. You have to have the correct stop to make that trade work. And if you look, right, if you took the opening print and you put a stop below, that would have, the opening bar, right, that would have hit you with a 10-point stop from the low. And look at the RR out of the yellow zone, right? So assuming you took the first bar, which would have been your first opportunity at the open, you took 57.90, this pushed up almost 58.10. That's a 20-point extension out of the yellow zone, given it's not as high in odds as the white zone. It's second highest odds, but a beautiful rotation. And 20 points is roughly $400 a contract on NQ. Really nice extension. Again, I do believe in scaling your position if you have more than one contract. And this is a maximum potential, right? I'm not saying anyone who took the trade that everyone knew where the high was. You could never know where the high is. But as it's pushing up, you're offering out your contracts and collecting the money on the way. Really simple, not much more complicated than that. You'll notice the second push in, we came down, and you'll notice they tried to break the low of the day, closed back in. Again, the reason why I focus on the first bar is because the second bars, it's a thinner product. They tried to break the yellow zone. They were never able to get an extension below. And the way that would have worked and what I would have expected is if it had come into the white zone, right, I would have expected responsive buyers, and then I would have expected to backside test that 57.87 and then roll down and then make a decision as to which way they wanted to take it. We're near the top of the range, so buyers, of course, are going to be in control. I want to leave one last note in NQ. A lot of people got really bearish on NQ last week, and I want to pull a bigger picture on a bigger time frame here. Let me just pull a new chart, right? Because there was a clue, and we covered this in the room. Again, I'm cognizant of the time. I want to keep it short, but I want to show you something here. On this afternoon, if you'll go look and compare this low right here, when this hit this non-low, right, the S&P 500 was hitting a new low. That was key. The reason why that was key is because if you remember over the July 4th holiday, the S&P was a stronger one and the NASDAQ was the weaker one. Well, we switched gears right there, and you'll notice this is a 200-point rebound all the way up here, right? And buyers have utterly taken control. We're back in the top fifth of the range. I stressed to the members in the room today. We really want to focus on the longs, the rotations down, and try to catch the rotations back up. You don't want to keep beating a dead horse. This trend line was firmly broken from the downside here. We clearly just killed that downtrend line to the upside, and there is a ton of momentum to the upside on this thing. They're going to try to contain this thing with a double top, but there's literally almost no resistance above this area. I want to see at least the prior day's low get broken before I get aggressive and looking for shorts to the downside on NQ. There's just no need to rush in. Calling tops and bottoms, unless they're incredibly obvious, right, doesn't make any sense to me. And even here, I wouldn't have taken the position overnight. I just wanted to recognize that this was a bullish gap up and that all of a sudden we started hitting higher highs and higher lows. I don't want to fight the market all the way up. I want to make sure that I get paid. Okay, now let's go to the stars of the day, and that was the bond market and the CL market. I'm going to cover CL last, the 30-year note first. So I want to take you back to the overnight market, right? Remember, the key of the white zone is the first touch of the zone is what we're focused on primarily, right? That narrows my decision-making process, makes it easier for me to keep track of my win ratio, and really confirm that it is a high rate of wins versus losses. So you'll notice we open up, we push out of the white zone, right? Push up to Wednesday's high. I'm going to trace this for you, right? Push out of Wednesday's high. This was the key target to the upside on Wednesday. We come back and we get the first backside test of this white zone, right? Notice almost no heat on that. And we push up in the European session, right? At late Asia, early Europe, from 152 30 seconds all the way up to 153 and 11 30 seconds. So that's basically 12 ticks off the top of that zone. 12 times 33 is roughly $400 a contract. It's $31 and change per point, but that's roughly $400 a contract, right? Then notice, first touch into the zone. Again, I can't emphasize enough the reason why I have members in the room, especially newer members, focusing on the white zone. First touch of the zone. Remember, this is now second touch of the zone in the Asia and European session. You'll notice, again, they tried to hold on that second touch. You have to be a more advanced trader to take the second touch of the zones and understand what the risk is involved. Look, on the backside test, right? Look how we come right around to a perfect backside test to the 27-30 seconds. And then we roll from 27-30 seconds. Remember, this is the first touch from underneath. 27-30 seconds, right down to 152 and 7-30 seconds. This is a big move, right? This is from 27 to 7 is 20 ticks, right? That's almost $600 a contract into that zone. And then I want you to notice something else. So first of all, this was a difficult period of time to take along, and I mentioned in the room. Why was it difficult? Because Fed Chairman Yellen was speaking. That adds to the risk. Why? If she says anything, her biggest impact is on the economy. The bonds respond immediately to comments. Right now, here's what I want to show you as we move on through the day. When she's done speaking, this second line here, this is where she finishes talking. So had you taken, right, had you taken while she was speaking, had you taken the top of the zone paused, and we held here for over an hour without being able to make an advance. The reason why I want to show this example is this zone eventually failed. This is a second zone, right? So the most you could have hoped for was about 4 ticks, 3 to 4 ticks off the top of this zone. It took an hour, but it was in the middle of Yellen speaking. Yellen's done speaking. The first time we hit the next white zone, right, you took 2 ticks of heat from 29-30 seconds. Actually, 1 tick of heat, 28-30 seconds, right? And then it rolls up. Look at your maximum favorable excursion all the way up to 152 and 11-30 seconds. So let's say you hit 10-30 seconds on the bid. It's unlikely to get hit on the ask, right? So you took it from 29, right? 29 to 152 is 4 ticks, right? 29, 30, 31, 32, 4 ticks. From 52 to 10, that's another 10 ticks. That's 14 ticks. That is about $400 to $500 per contract on this move, and you took almost no heat on it. Again, trade location matters, guys. It really makes your decision-making process so much easier. This was a tick right off the front of the zone. Next, let's go cover CL and finish up with a Grand Slam stop. So I want to point this out to y'all. Where are we today? Here we go. Wow, what a day, huh? Okay. When we came in overnight, this is beginning of Asia. This is London Open. We tested Wednesday's low. The purple line is not a trade location for non-advanced traders, right? Purple line came in. We found support. They double tested it at 7 a.m. and then it takes off. Now I want you to see something. You say, but Simon, it looked like a trend day. We had a trend day up. This is an incorrect line, by the way, guys. I know it held to 46.28, but I must have drawn this in later today. I did not have that as a white zone at all. The next white zone is up at 46.95. So I apologize. I must have been making an example in the room, but that white zone was not there when I published the zones earlier. Okay, so wow, I'm running over here. I want to point this out really closely, so let me magnify this. Okay. First time into the zone is on this bar right here at about between 8:15 and 8:30. I'm referring to this particular location, this specific bar right here, right? From that entry, your stop needed to be about 10 ticks behind the zone, right? And you'll notice your maximum favorable excursion. You had 2 opportunities to get good coverage, right? So our first scale from 1571, we were targeting 45.61. That let us take some of the risk off, and it's $100 a contract. That's a good trade. That's equivalent to 2 ES points, and it was a relatively short period of time for a slow market, right? Remember, this is in what's essentially a trend up, right? Eventually, if you held for your trailer, right, it extended all the way down this low. This is what I was doing in the room. Now I know how that line got in there, right? So it extended down to 45.55 from 45.71. It offered you essentially 16 ticks, maximum favorable excursion. Now, I'll tell you, what I try to do is when I get this entry, I'm trying to pay for my trailer because what I was targeting, CL's been in a downtrend, right? I was targeting to 44.62. I moved my stop to break even. So that was a choice I made because I was trying to hit a larger trade for a rotation down to the downside. It didn't happen. My trailers got stopped break even. I was trying to get the extension the second time out of this zone. It just didn't happen. I want to show you the next part of this trade. Now, the next part of this trade, notice we push above the white zone, consolidate above, first backside test back into this white zone, right? Remember, we're in trend day up at this point. This zone needed to hold. Now, my target would be the 46.95 to 47.12, which I wouldn't not be surprised if that hit either in the European session or sometime tomorrow, as long as this 45.85.71 holds overnight, right? I'd be looking for a target up to 46.95. And again, that backside touch, your maximum favorable excursion, this is where this came from, right? On this particular trade was from 45.85 to 46.28. That's 15, 30, 45, 43 ticks, $430 per contract, maximum favorable excursion to the upside. So again, what does all of this do for us today? This gave me key location to place trades both on the short side and the long side in bonds, ES, NQ, and CL. Now that doesn't necessarily mean I took trades in all of those, but for the members who did take trades, I had members who took long CL. I had someone who took 4 points out of ES this morning, out of the white zone. I had a nice day in CL, and I had an okay day in bonds as well. When that all adds up together, right, what that means is day over day, if you've been watching the videos, which by the way are posted on YouTube, they're in the StockTwits Twitter stream. I want a day after day scorecard repetition. This is what gives me the ability to constantly stack up P&L and helps me avoid boom bust situations. One particular rule, if I get 2 stops back to back in a day, I stop trading. That ends my terrible day if I have a down day like that, right? And then secondly, the white zones and the yellow zones on ES give me a place to focus my efforts. So if you would like to come in and try out our room and see what it's like to trade or how we trade these in real time, there's complete transparency, right? This is the email, tradenperform@gmail.com. I'm going to make that bigger so everyone can see it. There you go. tradeandperform@gmail.com. Anyone's welcome to come and visit us for 5 days. The charts are posted in the evening beforehand. Plenty of time to plan your trade. Trade your plan, right? Execute properly. Focus not only on entries, but also potential targets, right? And then also see the additional mentoring and coaching that goes on in the room during the day. The room cost is $95 a month. That's less than 2 ES points. And if you've been following the videos for any amount of time, you know that it pays for itself very, very quickly. Anyways, hope everyone had a wonderful day. I am out of here to prepare the charts, and then I'm going home to enjoy my family. I hope everyone killed it. I'll see y'all later, guys.